Right, good afternoon, listeners. In this afternoon's lesson, I'm going to introduce journals to you. But first of all, let's just go back. We know that in accountancy, a transaction takes place, an event. That event is recorded on a source document. So your cash register tape or your till slip, your check, you'll use your bank statement, and later you will introduce other source documents. Now, up to this point in time, those documents we were recording in a ledger, directly into the ledger, and then checking the accuracy via a trial balance. Now, the problem with that is that these ledgers can get very comprehensive with a lot of entries involved in them, keeping the records. You just imagine a bank account in any business. So we bring in an intermediary step, and that is our journals. The word journal stands for book. So what we're going to do now, we're going to introduce a series of journals. Journals which will summarize like events together. And then those totals from the journals will be posted into our ledger. And the first of the journals we're going to look at is our cash receipts and cash payments. So instead of putting each amount that you receive and pay directly into the bank ledger account, we're going to have journals which will summarize that and then put only the totals into the ledger. So let's start looking at our cash receipts journal. Now, for the purposes of this task, I am going to use a new era, grade 8, task 7.3. If you've got the textbook, please refer to it. It'll help you. Otherwise, you'll just have to follow my example on the web or wherever you are listening to this. The important thing at this stage is that in this exercise, all of this is money that the business is receiving. Now remember your principles, the business entity rule. Keep the business and the owner's affairs separate. So we are doing a cash receipts journal to summarize all the money that the business receives. So let's have a look here. It says to you, the owner, Mrs. Nebb, took a loan from Optimum Bankers for $50,000. The money was transferred directly into the bank account, so the business is receiving it. But take note, this money was transferred directly. Didn't come via the business, it didn't go into any till. Via the internet, the money went straight into the bank account. Now this is very common in today's day and age. The majority of banking takes place via the internet. The interest rate on this loan is 15.5%. Now on this day, there's no interest being paid. Those are the terms, and so it's just been noted. All we've got to record is that we are receiving $50,000. So into our cash receipts journal, and you've got it in your workbook over there. If you don't, please use any blank template of a cash receipts journal. The document is your bank statement. Now in grade 8 you would have studied documents, but this money was transferred directly in. So your bank statement, you'll have to go get a bank statement to see the money went in. The date is the 3rd. Now the details in the cash receipts refers to the who. Who did we get the money from? And we got this money from Optimum Bankers. Right, the analysis of receipts is like your till. So money that goes into a till, like if you were in the shop and they put the money in the till, you'd use the analysis. But in this case, the money was transferred directly into the bank account. So $50,000 in the bank. Now, remember when we were doing ledgers and trial balances, we said everything has a double entry. Not only has the bank been affected, but we now have a loan. We've got a liability. Now, in a cash receipts journal, you will open up columns here for those events that happen quite frequently. So if you get a lot of fee income, you'd have a separate column. If you're getting a lot of loans, you could open a loan column, and there's no limit to the number of columns. But eventually you can't just keep opening up all these columns, so we bring in, if there isn't a special, we open up a sundry accounts. So into the sundry accounts, the amount is $50,000, and then we have to use the details. What is this for? So anybody reading this can see that the business, because we're doing the cash receipts of Nebs, has received into the bank 50, and that is for 50,000 for a loan. Right, now on the 4th, Mrs. Nebb, who's the owner, also used some of her own funds as a capital contribution. Remember when we did terms that if an owner puts money into the business, it's called her capital. We issued her a receipt for 20,000, and the money again was transferred directly into the bank. Now, while Mrs. Nebb's private banking will be reducing, she'll have less money in her own private funds. In the business, it's increasing. So that must also go into the cash receipts. But this time, we did give her a receipt. So we could use the bank statement, but we also issued her a receipt. The date is the 4th. Who? This is Mrs. Nebb. And again, this money went directly into the bank. What is it for? It's for capital. We don't have a capital column. So we use sundries and we put capital. Now, Mrs. Nebb has got a hairdressing salon. So on the 6th, the total cash takings, her service fees or her fee income, there's various names that are attached to this, for the week amounted to 14,000 as per the cash register roll or the cash register tape. That white slip you get when you go to buy at a supermarket or any shop. So she's cutting hair, she's receiving money, so also into the cash receipts journal. But this time it's the cash register tape, and she's got a whole list of people here. In fact, 45 customers. Now you could do a separate entry for all 45, but you can imagine how long it's going to take you to do all of these entries. So we've actually lumped them together here to make it simpler in class. Right, the date is the 6th. Now the who, we don't have a who because these are all her customers. So you can write cash because you got cash, or you can write fee income, or you can write customers. It's not really that important as long as it relates to what's happening. But what is important is this 14,000 was taken through the till. That's why they've got cash register tape. So 14,000 into the analysis column. And then what is it for? It's for fee income, which we've got. So we go to a special fee income column. Now, if we go back to the task, you'll see that that's the end of the 6th. The next one is the 12th. Now, money will go into the till, but eventually it has to go into the bank. You take the money out of your till and you deposit into the bank account. Now, we work on the assumption at school that this money will be deposited daily. But if they don't give it to you on each individual day, when they've given you an entry like this, you must then assume that it's going into the bank. And so, into the bank now, so we underline, because you can't have the same 14,000 in the till and in the bank. So we're taking it out of the till, so I'm underlining, and into the bank goes 14,000. So there's no longer in the till, that's why it's underlined. Right, if we go back to the task, the 12th and the 18th are also for more service fees. So I want you to do that on your own. If you don't have an exercise, just freeze this frame now and you can read off the screen. And so there's different cash register tapes, fee income or cash. The amounts are in the analysis. There's only one amount on the 12th, one amount on the 18th. So we underline, take it out, put it in the bank. And what is it for? It's for fee income. So there's still a double entry. It's gone out of here. It's now in the bank and it's for fee income. Now I know this seems like an absolute waste of time. Why write it here, underline, put it in the bank, which is what we've done here 3 times. Now I want you to look at the 25th and you'll see the importance of this. On the 25th, Mrs. Nebb sublets part of her salon to a tenant, who's a beautician, at a monthly rental of 500. On this date, she, that's Mrs. Prim, paid in the rent for March and April. So she's paying 2 months. And we issued her a receipt, which means I'm receiving money. Then on the same day, we've got some more takings for the week of 9,000. but this time there's a cash register tape. So both of these must go into the cash receipts journal because we're receiving, but for different things. So you try it now. All right, so Mrs. Prim, the 1,000, remember she paid for 2 months, into the analysis, and it's for rent, so we're going to have rent income. And then there's another fee income. We've done that already, so 9,000 into the analysis and into fee income. Now here's the important. Both of these are on the 25th. So at the end of the 25th, we underline and we will take into the bank the total for the day. So it's that whole total. So that's why you don't put 1,000 and 9,000 in the bank. It's the total. You deposit that money in at the end of the 25th. Right, on the 28th, it says the bank statement from N Bank was received. Now remember, this money's been deposited into the bank, so we get a statement. Now this statement will either be sent to you, you can go onto the internet, you can go to an ATM, or you can go into the bank. We get it from our bank, and it showed a credit of 60 Rand being interest earned. The word earned tells you that you're receiving this money, you're earning it. So because you've got money in the bank, you're earning some interest. And it was earned on the current banking account. Current banking account is the bank account that we're operating with here. A bank account in which we will be able to write checks, which we'll see when we get to the cash payments. Now, what you need to take note is that when the bank credits us, they are giving us money. We are receiving. It is a positive. And so, into your cash receipts journal, this comes off the bank statement, comes from N Bank, and the 60 Rand, and for your interest on your current account. And then lastly, the last entry, we received a check from Vula Electricity for 320. This was in respect of an overpayment for electricity. Now we have overpaid our electricity, so we're receiving money back. So we're issuing them with a receipt. So this is actually going to be receipt number 3. Coming from a Vula Electricity, 320, and it's for a refund on your water and electricity. So the important things to note here is that some of the money will go into the analysis, into the till, but eventually it all gets into the bank. If it's transferred directly, then you have it in the bank. It will always go in somewhere else as well, because we always got a double entry. And that's why if you get to the end and you total up these columns, and this is where the advantage comes, because when we get to the ledger just now, you'll see we'll be posting totals and not individual amounts. Because everything went into the bank and either into fee income or sundry, and you can check, you can see those amounts are there. These two here must add up to that. It's another check you've got. We've already done a trial balance where we've had a check. Now we've got another check. These two must add up to that. So please make sure you understand this. And there are lots more activities in New Era, or I'm sure it'll be in your textbook as well. Please go on and sort out the cash receipts journal, how to enter, when to use the analysis, when to use straight into the bank. And then when you've done that, you'll be ready to go on with the cash payments journal.